Welcome to Oath&Ink Academy. Today we are diving into one of the most in-demand skills in the notary profession, the loan signing. Now, let's break this down from the start. A loan signing agent is a notary public who is specifically trained to guide borrowers through the signing of loan documents. This is not about giving legal advice. This is about knowing what each document is, being able to explain it in plain language to the borrower, and ensuring every signature line is signed, initialed, and dated correctly. By the end of this presentation, you will know the complete loan signing process from start to finish. What documents you'll see, how to tag them, what to say to the borrower, and how to complete the notary acts that are required. Let's get into it. Here's what to know before we go any further. Your role as a notary loan signing agent is very specifically defined. You are there to facilitate the signing, not to advise on it. This becomes important because one of the most common mistakes new signing agents make is overstepping into territory that belongs to attorneys. What does this actually mean for a new notary? It means you can say, "This is the promissory note," which outlines your loan terms, but you cannot say, "This rate seems high, you should question that," or "I think this clause could be a problem." The first statement identifies a document. The second crosses into legal advice. Now let's look at the four pillars of the signing agent role on this slide. You are a notary, you are a facilitator, you are a communicator, and you are a professional with very clear legal boundaries. Understanding those boundaries before your first signing is what separates a confident professional from someone who creates liability. One thing many beginners overlook is the preparation phase of a loan signing, and it's actually where the quality of your signing is determined. Let's break this down into the 6 things you must do before you arrive at the borrower's door. Step 1. Confirm the assignment in writing. You need to know the loan type, the borrower's name, the signing location, and your fee, all confirmed before you print a single page. Step 2 is printing. This sounds simple, but incorrect printing is one of the most common reasons signings fall through. Follow the printing instructions exactly. Step 3, and this one is huge. Review the entire package before the signing. Flag every signature and initial line. Know which documents need to be notarized. Walk into that signing like you've already done it once. Step 4, have your supplies ready. Your journal, seal, certificates, pens, and commission. Step 5, verify the borrower's name. If there's a mismatch between the ID and the loan documents, you need to flag that before you arrive. And step 6, communicate with the borrower. A quick call to set expectations takes 2 minutes and prevents a lot of confusion at the table. Preparation is professionalism. Here's where it can get confusing for new signing agents. The opening of a signing. You have just walked into someone's home or a signing office, and the borrower is looking to you for guidance. What do you say? Your opening script is everything. Read the script on this slide carefully. Notice what it does. It introduces you, establishes your role, sets clear expectations, and gives the borrower an exit ramp for questions that are outside your scope. That last part is critical. By telling the borrower upfront that loan-term questions go to their loan officer, you protect yourself from being put in a position where you might inadvertently give advice you're not authorized to give. Now let's look at the 2 immediate action items after that script. First, ID verification. This is not optional and cannot be rushed. The borrower's name on their ID must match the name on the loan documents. A middle initial discrepancy, a hyphenated name difference, these all need to be flagged to the signing service before you proceed. Second, set up your table professionally. Your calm, organized presence reassures the borrower and signals that you know exactly what you're doing. Another important point before we get into the individual documents. You need to walk into every signing knowing the anatomy of a loan package. How does this apply in real situations? When a borrower asks, "What is this?" you need an answer ready, not just a guess. A clear, confident explanation that identifies the document without crossing into legal advice. Let's break this down. A standard loan package contains roughly 10 core document types, though the exact number varies by lender and loan type. Some documents require your notarial act. Those are highlighted in gold. Others require only a signature from the borrower. The 3 documents you will most commonly notarize in a real estate loan signing are the deed of trust or mortgage, the signature and name affidavit, and the occupancy affidavit. Some packages also include a notarized compliance agreement. The rest are signature only. This is where many beginners make mistakes. They're unsure which documents need their seal, So they either over-notarize or miss required notarizations. Know this list. Review it before every signing. Now let's look at the first document you'll present at every purchase or refinance signing, the promissory note. Here's what to know. The promissory note is the borrower's legal, written promise to repay the loan. It contains the loan amount, the interest rate, the term, the monthly payment, and the first payment due date. Why is this step often misunderstood? Because new signing agents sometimes feel pressure to explain the rate or the payment to the borrower. Resist that pressure. Your script for this document is deliberate and concise. You say this is the promissory note. This is the document where you promise to repay your loan. Please review and sign where indicated. That's it. If the borrower asks about the rate, you say, great question. Your loan officer can walk you through all of the loan terms. Their contact information is in your closing documents. Now, on the document visual, notice the tagged fields. Field 4 is the interest rate, and field 6 is the monthly payment. These are informational fields you point to if asked what is this, but never comment on. Field 8 is the signature line. The borrower signs here in your presence. The deed of trust or mortgage, depending on your estate, is the most important document in the package from a notary's perspective, because this is the one you will notarize. Let's break this down carefully. The deed of trust secures the lender's interest in the property. If the borrower stops making payments, this is the document that gives the lender the legal right to foreclose. You do not explain that to the borrower. You simply tell them what it is and guide them through signing. Your script is, this is the deed of trust. This document secures your loan against your property. You will need to sign here, and I will be notarizing your signature. After the borrower signs, you complete the notarial acknowledgement. Walk through the tagged fields on the right panel of this slide. Fields 1 and 2 are your jurisdiction, your commission state and county. Fields 3 through 7 are informational. Field 8 is the borrower's signature, signed in your presence. Then fields 9 through 14 are yours to complete. The acknowledgement date, your name, the signer's name, their ID type, your signature, and your seal. This document may have multiple borrowers. If so, both borrowers must sign, and your acknowledgement must reflect all signers. Take your time with this document. It is the centerpiece of the notarial portion of the signing. Here's where it can get confusing. The closing disclosure is one of the most information-dense documents in the package, and borrowers often have a lot of questions when they see it. The CD summarizes the final loan terms, all closing costs, and the cash to close amount. It is a federally required document, and borrowers must receive it at least 3 business days before the closing date. Your script acknowledges that requirement in a way that sounds knowledgeable without crossing into advice. If a borrower says, this closing cost number is different from what I expected, that is a conversation for their loan officer, not you. Your response is, that's a great question for your loan officer. Would you like to call them before we continue? This is where many beginners make mistakes. They try to explain the discrepancy, which puts them in an advisory role. Notice on the document visual that fields 5, 6, 7, and 8 are informational. Rate, payment, costs, cash to close. You identify these if asked, but never advise on whether they are good, bad, or what they mean for the borrower's financial situation. This is where many beginners make mistakes. The right of rescission. Let's break this down carefully. The right of rescission only applies to refinances, not purchase loans. Federal law under the Truth in Lending Act gives borrowers 3 business days to cancel a refinance transaction after signing. This becomes important because borrowers sometimes ask you directly, do I really have 3 days to cancel? Your honest answer is, yes, federal law gives you 3 business days to cancel this refinance if you change your mind. That statement is factual. It explains a legal right disclosed in the document itself. That is different from advising the borrower on whether to rescind. You are stating what the document says. Your script is clear and concise. Identify the document, explain the 3-day right factually, and direct the borrower to sign. If they ask questions about whether they should exercise that right, redirect them to their loan officer. Also note, business days do not include weekends or federal holidays. Some signing agents mistakenly say calendar days. Know this distinction. Let's break this down quickly. The compliance agreement is one of the simpler documents in the package, but one that borrowers sometimes question. It essentially says, if there is a typo or clerical error in any of these documents, you agree to sign corrected versions. It does not give the lender permission to change loan terms, only to fix administrative errors. Your script is simple and accurate. Notice at the bottom of this slide, we've also covered the signature affidavit and occupancy affidavit, both of which require notarization using a jurat. Here's what to know about jurats in a loan signing. A jurat requires you to administer an oral oath before the borrower signs. You say something like, "Do you swear or affirm that the statements in this document are true to the best of your knowledge?" The borrower responds yes, and then signs. This is a required verbal step. Skipping it makes the jurat legally defective. The signature affidavit and occupancy affidavit both involve the borrower swearing to factual statements, which is exactly why a jurat, not an acknowledgement, is used for these documents. This slide is one of the most important in this entire presentation, and it's a concept that every loan signing agent must have mastered before their first assignment. Acknowledgements and jurats are both notarial acts, but they work very differently, and using the wrong one is a notarial error that can require an entire document to be re-executed. Here's the core distinction. An acknowledgement means the signer is confirming their signature is genuine and voluntary. They may have already signed the document. You're not witnessing the signing, you're certifying their identity and their acknowledgement. The deed of trust uses an acknowledgement. A jurat means the signer is swearing under oath that the contents of the document are true. They must sign in your presence after you administer the oath verbally. The name affidavit and occupancy affidavit use jurats. What could happen if this is skipped? If you notarize a document with the wrong type of act, the lender or title company may reject the package. That means the borrower has to sign again, the sign-in service loses confidence in you, and you may not be called for future assignments. Know the difference, practice your scripts, and always confirm which act each document requires before the signing. Now let's look at the exact steps you follow to complete each notarization at the sign-in table. And these two columns are important, one for acknowledgements, one for jurats. They share some steps but differ in critical ways. For an acknowledgement, step 1, verify the ID. Step 2, confirm the document is complete. Step 3, ask the borrower to confirm their signature is genuine and voluntary. Step 4, fill in your certificate block. Step 5, sign and seal. Step 6, journal entry. For jurats, step 1 is the same, ID and document check. But step 2 is the verbal oath, and it must happen before the borrower signs. This is a required step, not a courtesy. Step 3, witness the signature. Step 4, complete your jurat certificate using subscribed and sworn language. Step 5, sign and seal. Step 6, journal entry, noting that this was a jurat. Here's what to know about journal entries in loan signings. You will have multiple notarizations in one appointment. Each notarized document gets its own journal entry. Some signing agents create one entry per appointment and list all notarized documents. Check your state's requirements for which approach is correct. Another important point, how you close a sign-in reflects directly on your reputation with sign-in services and title companies. Your closing script does two things. It confirms everything is in order, and it sets the borrower's expectations for next steps without giving advice. You are not telling them when their loan funds. You're not telling them what happens next with their rate lock. You are pointing them to the right person for those questions. Now let's look at the 6 post-signing steps. Step 1, page review. This is non-negotiable. Before you leave, flip through every page and confirm every required signature and initial is there. A missing signature discovered after the package is shipped can kill the loan closing and cost everyone time and money. Step 2, separate borrower copies. This trips up new signing agents. The borrower keeps their copy set, not the original signed documents. Step 3, deficiency escalation. If you find a missing signature or a problem, call the sign-in service immediately. Never leave without flagging it. Steps 4 and 5 are about the return ship per instructions, retain tracking, and notify the sign-in service. And step 6, invoice. Submit promptly and keep your own records. Professionalism in the closing is what gets you repeat business. Let's get real for a moment, because this slide is about protecting your career. Here's the honest truth. Most loan signing agents who lose clients or get removed from sign-in service rosters do so because of one of these 6 mistakes. Mistake 1 is the most dangerous. Giving legal or financial advice. One sentence about whether a rate seems high can expose you to a complaint, a UPL accusation, Or worse, do not do it ever. Mistake 2. Wrong notarial act. This is a technical error with real consequences. Acknowledge versus Jurat. No both. Mistake 3. Missing signatures. One incomplete document can cause a closing to be delayed by days. The borrower has to come back, re-sign, you may not get paid for the extra trip, and the signing service may not call you again. Mistake 4. Incomplete journal entries. This is your legal protection. A missing or incomplete journal entry is a problem if you're ever audited or challenged. Mistake 5. Late or incorrect package return. The title company has deadlines. If you ship to the wrong address or use the wrong service, you're delaying someone's closing. And mistake 6. Name mismatches. This one must be caught before the signing begins, not discovered afterward. Know these 6. Avoid them. Your reputation is your business. Now let's look at what it takes to position yourself as a professional loan signing agent in the marketplace. Having your notary commission is the foundation, but signing services and title companies look for more before they trust you with a loan package worth hundreds of thousands of dollars. Here's what to know about the certification landscape. The NNA Certified Signing Agent credential is one of the most widely recognized. It involves a proctored exam and a background check, and both are commonly required by major signing services. The Loan Signing System by Mark Wills and Notary 2 Pro are excellent training programs that go deep into the practical mechanics of signings. Beyond training, you need a background check on file. Lenders have a duty to protect borrowers, and they require that their signing agents have been vetted. E&O insurance is increasingly a hard requirement, not optional. Many signing services will not assign you without proof of current coverage, and your surety bond keeps your commission in good standing with the state. Think of these 6 credentials as your professional credentials package. A commission alone gets you in the door. This full set makes you hireable. Here is your complete printable master checklist for every loan signing. 3 phases: before, at the table, and after, and 21 action items across all 3. Let's break this down phase by phase. Before the signing, 7 steps that set the foundation for everything else. Confirm the assignment, print correctly, review and flag the package, confirm notarized documents, prepare your supplies, check name alignment, and communicate with the borrower. At the table, 7 steps that carry you through the signing itself. Your opening script, Idaho verification, table setup, document presentation with scripts, oath administration for jurats, certificate completion, and the final page review. After the signing, 7 steps that close the loop professionally. Borrower copies, deficiency escalation, package return, tracking confirmation, journal entries, invoice, and record keeping. Here's the pro tip at the bottom of this slide. For your first 5 signings, go through this checklist explicitly at every stage. After 20 signings, these steps become instinct. The goal is not to always need the checklist. The goal is to internalize the standard so deeply that you never miss a step, whether you have the list or not. And that is a wrap on one of the most comprehensive loan signing trainings Oath&Ink Academy has ever produced. Let me leave you with this. The loan signing industry rewards notaries who are prepared, professional, and precise. Today you learn not just what to do, but what to say, how to say it, and where the legal lines are drawn. You now know the anatomy of a loan package, the scripts to use at every document, the difference between an acknowledgment and a jurat, the 6-step post-signing protocol, and the certification path to take your business to the next level. Here's how this applies in real situations. The next time you walk into a signing, you are not guessing. You know the promissory note is signature only. You know the deed of trust gets notarized with an acknowledgement. You know the name affidavit gets a jurat and requires an oral oath. You know exactly what to say, what not to say, and when to redirect to the loan officer. That knowledge is what transforms a nervous new notary into a confident professional that signing services call back again and again. If this video helped you, like it, share it with a fellow notary, and subscribe to Oath&Ink Academy for more professional grade education. I will see you in the next one.